See if I can invite more people. Share room, group access. Okay. Share link. Facebook. See if I can invite more people. Share room. Here we go. Hello, how are you guys doing? So welcome everyone for this is Zoom call number 13, and so I'm just going to jump right in. So while we are getting set up, and probably a couple more of you guys are going to join us. For all you guys, come online on the Zoom on Facebook Live that I have at the same time, and also I've also make it live on YouTube. Welcome everyone for joining us today, and great to see you guys. It's a wonderful day out there, and it's a wonderful day out there. So so I've been doing this. I've been doing this since the beginning of. I'm going to share the screens as well here. Just give me 1 second. Share options. I've been doing this since March, and my gosh, this is almost like basically 2 months, give or less of 3 months. And I figured that that's along the way I've done different Zoom and different meetups, and this is basically the one way that I've been finding really successful to keep in touch with all you guys, because we are all locked down at home more or less, and so bear with me. Sometimes I have to kind of toggle between screens and make sure all the guys has been able to unmute us. And so here we are, Zoom call number 13. So I just going to jump right in, because some of you guys has been seeing me online. Some of you guys is new, and so the format is fairly casual. But one thing that I want to let you guys know, that one thing we're focusing on is the networking part, is really the is this community part of this Zoom call. Is I'm having this Zoom calls every Wednesday, and sometimes I'm seeing new guys, sometimes I'm seeing repeating people, and I'm just trying to connect with all you guys online and hope to give you some values, as in what we do at what I do, how Lao and Hate to Break, and what my company do in the Calgary community, and what I do in the U.S. in the investing game. So what the gate, I introduce a little bit about myself for you guys who doesn't know me. I have been investors and first in the market in 2006. Have been investing in Canada, and U.S. and Hong Kong, and some of the market that I particularly like is the U.S. market, especially in the multifamily space. In a nutshell, I give you more information later on. But really, it's I have started investing in Canada. I have started investing in Hong Kong, and slowly expanding to the U.S. market. And as I have been sharing on meetups. So I'm on my own meetups. So people know me that I've been sharing on live meetings and get in touch with local investors, remote investor online. And now we're doing the Zoom call on different channel. And I've done multiple presentations this year's. It's the 17 or whatnot presentation I've done. So I get a lot of meeting like this, be connecting with all you guys. But every week I try to have a topic, and honestly, this week has been really tough, and it's been really tough in the sense that I'm thinking of what news to tell you guys, and so here I am. I'm going to talk about what I've seen as I educate myself, going through what the same as what you guys are going through, seeing news in the market, seeing conflicting information. The market is going up, the market is going down, and whatnot. So some of the tips that I find, including the safest asset that I seen out there from watching videos and live Zoom call, and just like all you guys, and get in touch with really smart, successful investor out there and what they think. And some updates on the market. I have quite a bit of update today, and I have about 5-6 updates that I find is pretty. I think it's pretty valuable to share with all you guys. And so I'm trying to adjust the screen a little bit. I see a couple more guys joining on Zoom call. Hi everyone, and yeah. So more updates on on the news. And again, it's kind of going back to the basic. I see all these big guys, medium guys, small guys doing, and they are kind of go back to the basics. And I would like to share with you what I've seen out there. And at the very end, I just add that at the very end, I add one slide about what I think, what is the risk benefits when we talk about, we're talking about a lot of changes right now in the market. Should we go in now? Should we go in later? So it's very, very interesting. I find it's very interesting because everyone is trying to time the market. And if you're in the investing field for some time, you know that that's really hard to time the market. It's almost impossible to time the market. The only thing that will help you is to prepare yourself right now. So we can talk about how do you prepare yourself. And I also have been sharing many times how I think, how I actually have been preparing myself. And I think smart investors like you guys should be preparing yourself in time like this. It's a wonderful opportunity, but you also need to educate yourself and be connected to the market, be knowing what's the market coming next. And you know what? Very fair. Something that's very fair is I've been seeing the market changes so quick. That is really hard to keep updated. So that's also one of the intent. I hope some of the information that I shown here will be able to share and filter it out. And just give me 1 second. I'm just trying to figure out this Facebook thing because just bear with me 1 second. I'm trying this new Facebook room thing. I don't think it works too well. So I'm just going to go to live. Okay. So building relationships. So I have one thing that I find is really really comforting. I should say really comforting is um, the market is changing so quickly. But one thing that you can still do, and I encourage all you guys to do, is keep connected to your investors. I keep contact with my investors on a weekly level. Talk about my investor that is already in my deals, or the investor that is that I would like them to be in my deal. So I keep them, whether it's key partners and whether that is key relationships and whatnot. I keep it. I try to keep the relationship alive at times like this, and I think it's very crucial because you really cannot, when you need to start raising capital, you can't really just, now we have this project we have to close in 3 months, and hopefully you can be with us come along. So that's one thing I find is keeping the relationship alive is very key. Um, so I've been seeing that, like, I've been on this Zoom call, and my multifamily is sort of like key as a multifamily mission is I like to share with other investors, like my investors, that telling them that there's a lot of cash flow investment out there, and that's why I particularly and telling all the investors that I do know to look further. Canada is a really great market, and with what is coming in, who knows, with a lot of predictions and what with the market is going to correct it, whatnot. There's going to be some opportunities. But I also have a heart-to-heart conversation with another investor 2 days ago. Is it's going to be need a lot of correction in the Canadian market in order to get the same type of cash flow requirements. I'm not talking about equity appreciation. I'm talking about the cash flow, just the cash flow part, to be able to match something that we able to see that in market like in the US. And of course, if you are into other segment, that a lot of big firms has been focused on US, and it's just basically the same reason, similar reason as why we also strongly believe the US market. It's because it's a really big market, and it's a lot of opportunity, and it's doing a lot. And it's just the inventory is 10 times the economy is 10 times. So I believe that anyone like me can do that. Um, so, but a lot of you guys also coming online and seeing why multifamilies, right? I've shared it many times already online, but why multifamilies? There's better cash flow. You can own more in when you own multifamily. Your own partner, you can basically carve out more with your investors, and at the end of the day, we're all doing investing for some reason. For myself, it's creating time from families, and for you, maybe different. We all have different things going on in our life, but really, is a better leverage, and is you can build bigger by inviting more people if you're doing it right, and you can learn how to do it right. So over the course of the years, so I built out online training. So this is my first, actually my second online training. That it's basically the first one that I really launched it, marketed, and advertised it, and it's going to be live on July 1st. So you will see more about the steps and how I do things, and by following what I call it the 8 steps to invest. Finding a market, creating a team, analyzing, underwriting the deals effectively, and with the proper due diligence, and creating a deal flow. And how do you find the market? How do you raise a capital, right? How do you find the loan, mortgage that you need in the U.S., right? And how do you negotiate offers? This has come over and over again, and it's going to keep coming up over and over again for next, because we actually going to right now is already in the end of the market. We are, depending on which market you're going in, it is already slowly moving into the buyer's market. And then at the end, how do you close the deal, right? So I would like to share some of the lights, as in what's my experience, what's my partner experience, and hope that we can able to help you. So again today, so some of the top news: how to build relationships, raise capital, or just to learn how to do it. So for start right off is um, I basically copied that from one of the reports I see. So I'll just read out for you guys. So situation is much different for lower type quality or higher risk asset. So some of the banks are attempting to sell loan back, and I find it um, very interesting. And it's an amazing fact. The key things that is actually on the fourth line. Some of the travel asset have difficulties sourcing bids. So basically, the bank is trying to sell the loan that they think have trouble. They're trying to sell 80 cents on the dollar, so 80% on the dollars. If they have a loan from a borrower, $1 million. So now they're trying to sell 800,000. That's what it means. So bigger discount expected for the distressed asset once the 90 days forbearance period started to roll off. And by the way, this is all strictly US, okay? And again, I don't pretend that I know everything, and I'm just collecting informations along the way and trying to hope to share with all you guys. But one thing that I find is so we are in June right now. So there's one thing that is so amazing, and it's one thing we're going through this cycle is everyone's talking about month by month. I remember when we were in March, everyone's talking about April 1st on the collections, and when we're in April, everyone talking about May 1st collections. And now everyone's talking about, we just passed the June's collection and talk about apartments. And I think we're at 80% collections, 80 something percent collections, which is pretty good. Um, Considerable. I think they compared to last year is about 1 or 2%. So they don't see so much effect in terms of collection. So back up a little bit when we talk about collections. It means when tenants pay, and this is strictly when the 80% I'm talking about NFs exceed, which is the U.S. apartments authorizations, and the 80% is what I think last year, same month, is about 81. So they're slowly seeing coming down in the collection number, which is expected because millions of people are without jobs. But now they are closely monitoring the forbearance period start to roll off. The forbearance basically means the bank cannot foreclose the loan if the borrower is not paying the mortgage. Simply that. So the federal the U.S. government put a forbearance period, basically stopping the bank from doing it, stopping lenders from doing it. So who knows the extension for that? I haven't. I could be there's an extension for that, but I haven't seen yet. But the July and August is the date that people really start paying attention. What is obviously some of the really obvious asset that is actually everyone's paying attention is of course is hotel, right? Is of course is another thing is retail, and another one really pay attention is office. We all pay attention to what's happening, and the truth is, um, um, there's a lot of prediction out there, but the smart guys always tell you is no one's really know what's happening. There's so much moving parts. What you can analyze, you can prepare, and you really need to if you are into this game. But there's so much going on, and I still remember at the beginning of this 2 months, my thought process has changed too. I see also more to myself. My thought process has changed, and I actually summarize it in one of the slides later on, related to the risk and benefit. How do you weight with you going to market right now? What is the risk for that, right? If you're going in 6 months from now, what's the benefit of that? So on and so forth. So I try to do that a little bit. And then the news. So CMBS loan on the pace to hit a new record high for delinquency in May and June. So CMBS loan, commercial mortgage-backed security loan, for you guys who doesn't know that, basically, so they are jumped significantly for certain type of asset in the U.S. again. So it's jumped from 1.5% for March, which is before the pandemic, and to 20.8% in April. So I didn't have the latest information. What is the numbers for May and June? But basically, from my communication with mortgage broker is CMBS loan in terms of the credit side has been completely halted to stopped. So basically, that's not CMBS loan available anymore. So other than insurance company, bank, and agency loan, so those are still available. But again, is what we talk about again is hotel, and and this is the loan informations, and but it's very interesting. So I also included this. But what is hot here in terms of like when we focus on all this loan, now we focus on CMBS loan, and what is in the CMBS loan segment. So they talk about student housing. So so the 10%, so the 11%, 10% delinquent on student housing versus multifamily. Why I want to include this is it's because again, like everyone's going to tell you different things, and every report is going to tell you different things, so you have to look at different reports and try to digest and get the information that you need. But one thing that I'm really amazed, I'm actually really happy, is when they compare what is the delinquency on multifamily versus some type of the multifamily. So student house is let's just say the type of multifamily, subset of the multifamily. So it's hard here, of course, because student is not going to school, and obviously and then the rent becomes delinquent. Student not paying, the parents supporting the kids not paying. Now it affected the landlords. So all this graph is basically what I want to highlight is when they talk about student-based loan, it's not for all type of asset too as well, at least for this graph. So it's talking about subset of the CMBS loan will be highlighted. Of course, it's case by case, and you have all the kind of asset. You have industrial, you have medical office, you have data servers, and you have multifamilies and office, and all this kind of different asset. So we really have to pay attention when you are investing in your market, right? Hang on one second, I'm just adding two more guys in the groups. Bear with me. And yeah, so again, when we talk about multifamily or different kind of asset, is will be paying off if you pay more attention, as in what you're talking about. We're talking about commercials. When you see in the news, like I guess one of the things that I want to help you guys is when you see on the news line, commercial real estate is hard hit. By the way, commercial real estate in the world is worth 270 trillion, based on report I read, 270 trillion worth of asset in the world. So it's a lot of asset, obviously. So when they say that commercial real estate is hard hit, so it worth to understand, it will pay off to understand what they're actually talking about. They talk about everything, or they talk about subset of it. And you will also find as you read more online, as you educate yourself more, is actually there are a different kind of that's different kind of type and whatnot. So I talked about it earlier. So enough of negative news. On the front side, I also see some positive news, which is very encouraging, and I want to share with all you guys. And then if you guys some of you guys into money or capital raising, and you know all this news, but some of the guys maybe they're kind of new. But basically, I just highlight the two company that the first one is Anderson raised 1.3 billion in 2 weeks, and they're targeting the strata asset, and they typically would take them 2 years to raise the 1.3 billions. I think that number has increased to higher numbers, something closer to 2 billions. But anyway, so it's not that the market has dried out completely when we talk about raising capital. And why I put it here, because I want you guys to think about, it's really easy when we say the market is down, so you can't raise capital. In fact, it's not true. Some people is actually doing really well. Some people is actually waiting. Blackstone, everyone's known Blackstone. So they have, and second bullet is they have set aside, they have dry powder, 152 billions. that's worth of capital available out there, and they're not pulling a trigger yet. So I'm not going to say that they're not pulling a trigger. You shouldn't pull a trigger. And one thing I want to highlight is all these big firms, medium firms, huge firms, they are raising capital and they're waiting to go in. It's like it's like it's like they predict this happening, and for other people who may be later in the game, they may others big numbers, but not intended to to say that we all do that. Of course, this is not the intention. The intention is to let you know that the market is still very active, depending on where the subset of segments you're looking at, and such as when we say the commercial real estate really risky, or like even worse is like when they say the real estate market is really risky. So you really have to filter out, or when they say some of the market is really hard heated. So that it is not wrong, but they are oftentimes omitting some kind of information is really key. That may be not helping you to do your next investment decisions. And I don't know anyone read Howard Marks' memo. And if you go to Google Howard Marks, he's a very respected individuals in the capital raising in the investment field. And I particularly put an extract on this. It's basically he said basically it's in the certainty. This is his last memo. And you go Google Howard Marks' memo on Google, you will find his memo shared with his investors. But basically, smart investor, very smart investor like that, are saying that you basically cannot prepare the market. You cannot predict the market, and it's because of so many things, right? Because of negative interest rate, because of trillions of dollars has been put in the market, because of the pandemic, and so on and so forth, and because of reopening. So what comes down to, you can only prepare. You can only prepare today, by the way. You can only prepare today and building relationship, raising capital, and start marketing yourself if you decide that whether you're going to be invested. Even if you're going to be investing passively, you need to know what your what the investor come to you is like, when they say invest in the market, it will help you. I hope it will help you when I present some of the information, because you need to know which market you need to go in to avoid some of the subset on the asset type you want to go in, or you want to avoid, and I hope that helps you as well. And even though, and I put this news number 5 here, and I want to show it to you. There's a classic example. You have to really put on your analytical cap. Really think when they present some of the information, is it true or not true? So this is conflicting news from news number 3 that talk about CMBS loan is delinquent 10% for student housing, right? And this is another one from National Online Real Estate, and it's talking about majority of the university has been planning to go back to normal physical classroom settings. So and so that's obviously encouraging news for student housing owners, student housing investors, but it's continuously to becomes I would say more risky compared to normal typical multifamilies, right? Because you don't have to, technically you don't have to go to school, but you have to stay at home. So, but why I'm here, included here, but I want you guys to know, don't really look at one news, don't watch one news, only one news sources, look at multiple, and come to a conclusion yourself. And I add this slides. This should be observation 6. Sorry about my typo. I just added today, and I'm just gonna make this a little bit bigger. I've been sharing these slides at the beginning of this pandemic. So this is, by the way, for you guys doesn't know this, Federal Reserve has a pretty open book policy. They share with you what is the balance sheet is actually looking right now at current moment. So the first graph that I'm showing here is showing, so after 2008, so the Federal Reserve has printed about $4 trillion of debt that's supporting the economy and whatnot. And you see that is all the way dropped a little bit at September of 2019, and it's crept back up to 4.14 trillion, something like that, at the beginning of the year. So that this graph is showing is the beginning of the year. And I haven't shown you guys the graph for last a few meetings or Zoom calls, but I would like to share with all you guys, because when you see in the market, it's going up, 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 right? I'm talking about stock market particularly. It's really helpful to understand what is actually going on and why the market is going up. And even though the economy is still shut down, millions of people are still out of jobs, because I puzzle, I have the questions, like Mark, like Howard Marks and other people's. Like, I have questions. Um, if one third of the restaurants and if the entire tourism industry is basically ground to a halt, and if a lot of company is trying to think of a plan to moving away from trying to reconfigure the offices, and they think of all this plan to keep most of the employee to a stay at home. So I'm talking about office here. So what is going on? What is going on with the stock market, right? So I puzzle because I cannot answer that. So when I cannot answer that, personally speaking, and you can choose to do that, you can choose not to do that, is your options. Personally, I always come back to this graph. Okay, it's a really high level understanding of what is going on in the U.S. government. So you notice. So let's see if I can back up. So it's 4 trillion at the beginning of the pandemic. So this graph, by the way, is updated every Thursday. If you Google, again, if you Google Federal Reserve balance sheets, and they have this open 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 format, so that you can just go online and they will open to let you guys know how much money they print, basically. How much, because in the US is backed by the dollar, is backed by the bonds, right? And so the $1 print is equal to $1 they're going to circulate in the economy. So it's really simple math, but it's really amazing math as well. So I put it here. So Federal Reserve balance doubled in 6 months, and this was done. If you look at the upper graph, it took them 2008 all the way to 2014, approximately 6 years to double, to make that 4 trillion. So now they do double that in 6 months. I'm going to leave the interpretations to you guys to think about what's going on, right? And you see that really, really sharp upwards from what's going on, from to 7 trillions. I don't know if I don't know if there will be any decrease. I doubt that if you guys pay attention to this graph, to the market, there's no condition they're going to be decreasing the trillion of asset in any foreseeable future, and the graph will probably keep going up. Who knows, right? Again, we are not here to predict the future. We are here to looking at macroly what is government doing it, right? Macroly, what's the government doing, and what they're buying, and things like that. So they're buying a lot of assets. They're buying a lot of stocks. They're buying even a non-investment grade bond security from some of the company that typically they need to be investment grade to back during normal time. So, but again, I want to single out the magnitude. It's in 6 months, and it's the same amount of the asset. And I shared the slides last week. I didn't have it here. So U.S. in terms of printing money, the pace of printing money, they're printing about 10% of the GDP, which you look at all the major economy, Europe, Canada, Japan, between 3 to 6% of the GDP. So U.S. is printing significantly a lot, and we are not even at the end yet. Next slides. And let's see. Zoom out. So, not trying to go to specific, but one thing that I see it often times and times again, and those are happening quite often. And I didn't include data center because it's still a really small subset of the market when we talk about asset. So medical, industrial, multifamilies seems like coming on and on again, which is encouraging for people like us who participate in one market. Because the truth is, if you are investing in one type of asset, you're not going to change to other type of assets just because if tomorrow is good, or like it takes years of skills to be able to good at one type of asset. If you're good at industrial, it unless you have a really really strong team, a really big team, and otherwise it will be really hard for you to change from multifamily industrial, or like from industry to office. So but the same asset that I'm seeing over and over again is those are the threes that I see over and over again on the news. And I was going to stop sharing the news, but I found it really interesting. I know you guys seeing that as well. I put in one slide for Canadian real estate market. So another major bank this week announced that they predict the upcoming price reduction in the Canadian real estate market. CNBC at the beginning of the month, last of the month, talking about the major decrease price or like adjustment in the Canadian real estate market, and they are predicting was the 1980s. Who knows, right? And so out of the all the top 5 or top 6, so this is the first major bank, National Bank of Canada, come out and say that but again, I'm just putting news out there, and they talk about the trend down there is basically showing what's happening in Vancouver, Calgary, and Toronto. No one's know because at Mark said at how Mark said you really don't know what is the future hold, but I think one thing is really really important is you have to look at, if you're investing in stock market, if you're investing in Canadian market, where is your safe asset, right? Where's the safe asset? If you're thinking that you're going to win the Canadian real estate market, can you cash flow in even when the market corrected? And that's why people, investors like me, I'm always bullish on the U.S. market, because you can cash flow, and it's much bigger product, much lower selection you can do, and find your best investment product. So again, come back to the preparations. So what I've been doing, so I'm creating virtual boot camps. I'm creating virtual Wednesday Zoom calls, and I am also, once the markets go up, actually one of my students say that when are we going to reset the market, and so I don't have a firm date yet, but we're going to reset the market when it's open now. And also started a home study virtual study investing program, and I said already starting in June. So that's how I prepare myself. And what I'm doing also, I've been building more investor relationships with. I figured out I didn't know honestly, I didn't know that was needed to be done at the beginning of this pandemic. But I found out that actually I was doing way more raising capitals, talking to way more investors that I had been before. I'm using my own track record to attract investors to invest in the U.S. because I think it makes sense, and building deal flow and building broker relationships right now. And I think you should be start doing it yourself right now too. Like all the people who are thinking of, how can I do that? I have a lot of resources to put it out there, or just come and talk to me, and I can point you in the right directions. Start building a relationship, start raising capital. I share the 2 news to you today that the big firm is doing it. They're not deploying it right now, but you also cannot deploy at the same time you raise. So you have to raise beforehand, you can deploy. So all those things that I'm telling you to do, I'm doing right now. And I also say that I also want to put in 1 wins, as in what have we wins. You guys think about what is your wins through a time like this. But my personal wins, even the stock market is down 30-40% for the last 6 months, 3 months. So I'm still on my deal. I'm still putting equity and paying my investor back 100% return of the capital plus the promised return. And I want to put it out there because I think it's a win. I don't know how many other vehicles other than commercial real estate, other than multifamily, can do it. And if you can do it, congratulate on you able to do that. But that's my personal win, and I think you guys will have your win even in time like this. I add this slides because I think it's very. I told you at the beginning of this meeting. I told you guys, I changed my thought during this last 3 months, And because at the beginning I was really, to be honest, I was really bullish at the beginning. I was thinking, this will change really quickly, and the market will be able to correct quickly, and we're into this buying opportunity very quickly. But basically, my thoughts are, so I'm not saying that you stop. You remember I said keep on raising capital, keep on building relations with the deal flow, right? And I say that, but I have this thought, and really is, if we're gonna enter the market right now, will it go up substantially? I just say like 20% in the next 2 years, and I don't know. Again, I don't have a crystal ball, so I ask myself this question. And the other question is, if we enter the market actually in later on, it should say 6 months from now, will it actually go down in the 2 years? And I waited out, if I go and enter right now or enter in 6 months, will the market go up or will the market go down? So again, bear in mind that we have millions of people who are running out of jobs, right? We talk about one third of restaurants may not be come back to business. We talk about major retailers that may not be opening stores. And of course, there's a lot of tech companies doing well. But we talk about a lot of office owners and retail owners. I'm talking about commercial real estate and tourism and all that. So you don't need me to remind you all those things going on. So one thing that I want to mention is, when you wait it out, the market is doing good or whatnot. Don't only looking at the Dow Jones. Is that I haven't kept track. I know it come back up quite a bit. Don't only look at that, because they may be coming directly, from the Federal Reserve. I don't know, and I think you probably know better, but maybe directly or indirectly. And I guess the next question is, what's the risk to wait it a little bit? And wait a little bit, I mean, waited not going to market doesn't mean they waited and not raising capital and building relationships. So again, I leave the decision up to you guys. But this is the thing that I'm thinking going on in my mind is, like, because I have experience, a personal experience. I put in an offer on a apartments buildings, 48 units in the major market in the Midwest, and the market the sellers asked for 3.9, and we go in 2.5. Eventually, after 2 weeks, the sellers saying that it's too depressing to get so many lowball offers. They have to pull off the market. So we are going into this discovery, they call it price discovery stage of the market, that we don't know how much it has dropped, but it has certainly dropped based on all the reasons we talked about, right? But how much has it dropped, we don't know. And that's why investor or buyers going in aggressively, trying to find the supply and demand curve, right? What is the price? So we call it price discovery. And all the guys that this moving shakers is basically saying the same thing. We don't know yet. So I guess I don't know what you're gonna do, but I would keep raising capital. I would keep building relationships. At the same time, even if it's gonna come back up, it's gonna take its time to come back up. And I'm personally not rushing into the market. I'm telling my investors the same. I'm not rushing in the market, because you know what? That's going to be a lot of opportunity. There's going to be some competitions. You already see that, right? That people are doing the job. But hope that you guys will be one of the competitions when we are ready to go in the market. But you have to do the work right now. So again, this is my home study program that I devised for people who want to think about how to do investing themselves, and is launching on the July 1st. And and then meetups. So I have this next coming up Saturday, on this Saturday in 3 days, my monthly meetups. So I don't know whether, by the way, people who have already registered. So you should have, when it's going live, at 20 to 50 people come to meetings on the libraries, right? And meet some of you guys, good friends on the library. But I don't know. I know the phase 2 has been opened up, but I'm trying to go online and find out whether they will open up and room for us to go in. It seems like it's open up, but it's only for curbside pickup. So I can let you guys know, keep you guys up to date if you guys want to join online. But it will definitely be online sessions just like this. But that's the meetup. And again, I'm sharing with you guys some of the top news. I'm also telling you what I'm doing, build a relationship, raising capital, and learn how to do that. And that's it for today. And thanks very much for all of you guys joining us. And if you have questions, let me know. If not, then I see you guys next week, or see you guys on Saturday. Right? No questions. See you guys on Saturday, and wish you guys have a good week. Thanks for joining us, and have a wonderful rest of the week.
Awesome. Thanks, Howard.
Thank you.
Thanks, God. Bye.
Thanks, Howard.
Bye. Bye, Kazan. I think you're the last one here. Have a good rest of the week.